Guys, this is S&P 500 weekly technical analysis for the week of December 5th, 2022. That is from December 5th, Monday to December 9th, Friday. Now, if you notice that there is this beautiful pattern formed in S&P 500 and the similar pattern was seen in the Nasdaq as well as in the Dow Jones. But this is much more clear in Nasdaq and then in S&P 500 and then in the Dow Jones, right? So this pattern, I will tell you more about this pattern, that how this pattern is going to impact the movement of the S&P 500 in the next week. And if you notice that the last week, this the entire movement, it was between 3937 and the high was 4100. So the entire movement was confined to 3937 and 4110. And if you notice in my previous S&P 500 technical analysis, this is the weekly technical analysis, I have mentioned this thing very, very clearly, that we are anticipating a movement in the S&P 500 very likely between 3937 and 4110. Means for the entire week, the S&P 500 is expected to remain in between these two levels only. And the same thing you are seeing here, 3937 and 4110. So the high of the S&P 500, it was 4100 and the low was 3937. So it was very well confined within the range as we have anticipated and as was predicted in the previous S&P 500 technical analysis. Now, other than that, if you're subscribed to my YouTube channel, then I've mentioned this thing that 4035 is the level that will define the upward or the downward movement. If the S&P 500 is able to survive above 4035, then it will be holding its short-term bull trend. If it fails to clear the 4035, the zone of 4035, then it will come down. So anything above 4035 is bullish. Anything below 4035 is bearish. This is 4035. This is 4035. So we knew about the 4035 it very well in advance, even before the session began, okay, on the Monday. Other than that, we knew that the movement of the S&P 500, it will be constrained or it will be confined into in between the 3937 and 4110. That's it. So these things we knew very well in advance, even before the open of the stock market on Monday. I was giving the updates, the daily updates to my YouTube community members, that what is going to happen or what is happening on day by day basis. What is happening on Monday, what is happening on Tuesday, Wednesday, Thursday and Friday. Every day what is happening, what was happening, I was giving these updates to my YouTube community members. So the movement was once again as was predicted in the previous weekly technical analysis of the S&P 500. And this time once again we have achieved an accuracy of more than 90% in the S&P 500 in the prediction of the S&P 500 movement. And if you want to see another example, then yesterday, even before the closing of the S&P 500, I have given this information to my YouTube community members that see, today in the S&P 500 we are expecting that the S&P 500 will remain below 4078 or is expected to close below 4078. And if you notice, the closing of the S&P 500 was at 4071. So guys, if you have not subscribed to my channel, then please subscribe the channel and click on the bell notification icon. And guys, other than that, if you want to join my YouTube community, then just below this video there is the join button. This is the join button, JOIN join button. So once you click on the join button, then you will be able to join my YouTube community and you'll be getting the daily analysis, the daily updates of the S&P 500. Now guys, let's discuss the agenda of this S&P 500 weekly technical analysis. So in this, the weekly technical analysis of the S&P 500, so the first point in our agenda is S&P 500 technical analysis and also the Dow Jones technical analysis on the weekly chart. See, although this technical analysis, it is focused on the S&P 500, but here only on the weekly chart I am going to talk about the Dow Jones also, because there is some very, very important thing. So when I say the weekly chart, so the weekly chart means the hawk eye view, like what is happening on the broader scale, the big picture. We want to see the big picture. Okay, see, most of you might be trading, okay, with the 1 minute chart, 5 minute chart, okay, maybe 3 minute chart, maybe 10 minute chart. Okay, but that is not the big picture, right? The big picture comes when you look into the weekly chart or this is the monthly chart. Then only you come to know, okay, that yes, okay, this is the thing, this is the real picture. So through this, the hawk eye view, we will see what is happening in the S&P 500 in the long term and in the Dow Jones in the long term and what we can expect, right? Then the next point in our agenda is the Fed chairman's comments, PMI and NFP. NFP is non-farm payroll, and then the inflation. So we will then analyze, okay, what the Fed chairman has said and why the S&P, why the S&P 500, Dow Jones and the entire stock market neglected the PMI data, and then this the NFP data, non-farm payroll. Why the entire stock market, it has neglected the PMI data, but the stock market has accepted the NFP data. So there is some reason. PMI data, okay, this the PMI data, it was worse than expected, okay, or anticipated by the analysts, right? But the NFP data, again, it was beyond the expectation. So why the stock market reacted to the NFP data? Okay, and again, all of these things, okay, are linked to the comments of the Fed chairman. Okay, that was there on Wednesday, and because of the comments of the Fed chairman on Wednesday, we have seen there's a very heavy upward movement in the entire stock market, including the S&P 500 and the Dow Jones and the Nasdaq, right? So and all of these things are related, and all of these things are linked to the inflation. Okay, the impact, the possible inflation, and the impact of inflation on the global economies and on the stock market. So that will be the second point in our agenda. The third point in our agenda is the S&P 500 support and resistance levels. So I will tell you once again, I will tell you that what we are expecting in the coming week. So last week what I told you, that we are anticipating that the range will be 3937 to 4110, means whatever is going to happen in the S&P 500, it will be in between these two levels, most likely in between these two levels only, right? And yes, and it was exactly as was expected and predicted. Similarly, through these S&P 500 support and resistance levels, I will tell you that what support and resistance levels, okay, will be heavy or strong, okay, in the coming week. Then comes the fourth point in our agenda, and the fourth point is the S&P 500 technical analysis on the daily chart. So see, this, the first point is the S&P 500 technical analysis on the weekly chart. This is the S&P 500 technical analysis on the daily chart, means what is happening on the daily basis, what the technical indicators are saying on the daily basis. Then comes the last point, and this last point is I know that it is your favorite point, okay, it is the probable movement of S&P 500 from December 5th Monday to December 9th Friday, because you want to know what is going to happen in the S&P 500 in the coming week. Just like, okay, I mentioned this thing, the movement, the ups, the downs, failure, the success. So similarly, okay, I will be giving you the probable movement of the S&P 500 from December 5th Monday to December 9th Friday. And guys, because this technical analysis, okay, it will be a bit lengthy, that is why I made sections. And because of the sections, it is very, very easy to navigate, okay, through this the technical analysis. Whichever part, whichever section you want to watch, you can watch. Now guys, one more thing that I want to clear here is that this technical analysis is not a financial advice in any form or in any manner. This S&P 500 technical analysis does not provide any trade setups. Now guys, because I do not know how you are going to interpret my S&P 500 technical analysis, that is why I will not comment, and I'm not responsible for an individual's own trade or his or her profits or losses. So guys, once again, if you have not subscribed to this channel, then please subscribe the channel and click on the bell notification icon. And if you want to get the daily analysis, the daily updates of the S&P 500, then you can join my YouTube community. And in order to join my YouTube community, there is the join button just below this video. So you can use the join button in order to join my YouTube community. So guys, now I'm going to begin with the first point in our agenda, that is the S&P 500 technical analysis and also the Dow Jones technical analysis on the weekly chart. Now guys, we are going to talk about the first point in our agenda, and this is the S&P 500 technical analysis on the weekly chart. Remember, weekly chart. Let me write it down, weekly chart. W as in weekly. So weekly means that one candle represents 1 week, not 1 day or 1 month or 1 hour or 1 minute. One candle means 1 week. So first I will talk about the S&P 500, and then I will talk about the Dow Jones on the weekly chart, right? So technically, when we look into this, so first we need to look into the candle. Now because the shape of the candle is undefined, Undefined means that this is not a so the shape of the candle is not in a perfect manner where we can say, okay, that because of this candle this is going to happen or that will happen. As of now, the shape of the candle, okay, it is undefined, so we are simply going to count it as a bullish candle, nothing else. Okay, so there is no defined shape of this candle, it is just a bullish candle. Bullish candle means bullish sentiments, simple, nothing else. Okay, now let's talk about the technicals. So when we look into the technicals, because the S&P 500 on the weekly chart is trading below the Ichimoku cloud, this means that the S&P 500 is bearish through the Ichimoku cloud, right? Now comes the Bollinger Band, because this is the upper band of the Bollinger Band, this is the median of the Bollinger Band, and the S&P 500 has closed on the weekly chart in between the upper band and the median of the Bollinger Band. This means that the S&P 500 is bullish through the Bollinger Bands. Then comes the moving averages. When we look into the moving averages, there is no crossover in the moving averages. However, the closing of the S&P 500 is above all of the moving averages. This means that the S&P 500 is bullish. The S&P 500 is bullish based on the closing above the moving averages. However, there is still no crossover and the existing pattern of the moving averages is still supporting the bear trend. This means that overall the moving averages are indicating that the S&P 500 is neutral. So now we have seen these three technical indicators, and now let's talk about some other technical indicators. So when we look into these other technical indicators, first thing is this the MACD, and we know that MACD is moving average convergence divergence, right? So MACD, when you look into the MACD is more than the signal, clearly bullish, clearly bullish. However, MACD and signal both are negative, This indicates that the long-term trend of the S&P 500 is still bearish. So as so this S&P 500, okay, it is directionally bullish. It is directionally bullish through the MACD, but the trend is still long-term bearish. Now, in simple words, we can simply say that there is a long-term bear trend, and for now we are in the short-term bull trend. In a long-term bear trend, we have a short-term bull trend. Simple, right? Now comes the stochastic RSI. When we look at the stochastic RSI, the K channel is more than the D channel. This indicates and other than that, the K channel is more than 95. Okay, so this indicates that through stochastic RSI, S&P 500 is heavily bullish. It is heavily bullish. Okay, now if there comes another bull candle in the coming week, although we do not have any big news that is coming out in the coming week. Okay, however, if some news come, okay, like if some news comes like China, okay, or Russia Ukraine part, okay, in that case only, okay, based on the news, whether it's positive or negative, okay, there will be the movements. Otherwise, in the coming week, in the next week, S&P 500 and the entire stock market is expected to trade through the technicals. This means that yes, now because it is expected to trade through the technicals, means we can predict the movement, okay, as we are doing for last many months. Whenever the stock market trades through the technicals, S&P 500, Dow Jones, Nasdaq, whenever the trading is through the technicals and the news is not there, or the whatever news will be there, it will be having very limited impact. This means now the technicals will drive the stock market, right? And whenever the technicals drive the stock market, then we have seen that the accuracy is pretty much high. Okay, it is very high, just like we have, okay, seen for this the previous S&P 500 weekly technical analysis. Now if the S&P 500, okay, if it is able to move up, and if it try to form a bullish candle, in that case the stochastic RSI, the K channel will become, so generally, okay, we call it as overbought. Okay, in layman terms, overbought, or in technical terms, okay, we say overvalued. This means that when the K channel hits 100, okay, in the next week, whenever the S&P 500 try to move up, in that case S&P 500 will be considered overvalued, saturated, right? So intraday, okay, so if this thing happens like by Tuesday or Wednesday, in that case, okay, the rest of these the days, okay, Thursday and Friday, we can see that the S&P 500 it will try to cool down the technicals and then it will come down. Okay, I'm not saying that there will be very heavy fall now. It will try to come down to the levels where it can simply cool down the technicals. That's it, nothing else. Okay, so that level we are going to talk about here, and other than that the accurate level, okay, it will be known only and only when the stock market will be in the session, when the S&P 500 will be in the session, and based on the movement initially on Monday and Tuesday, okay, we'll be able to see, okay, that this is the level. Beyond this level it will be saturated, below this level it will not be saturated, right? So if you're my YouTube community member, okay, then I will update you, okay, through this the pre-market update. Okay, now comes the divergence is normal, not a problem for the S&P 500. Volatility is okay, so it is like now it has come down, but still it is like more than 85% or more than this the 90%. And these are other technical indicators you are seeing, so these are the part of my research. So now guys, what we have seen, that the S&P 500 is bearish through the Ichimoku, clearly. S&P 500 is bullish through the Bollinger Bands, yes, it is bullish. S&P 500 is neutral through the moving averages, yes, it is neutral. Okay, or also there is the second, okay, definition that we can say, that the S&P 500 through the moving averages is in the long-term bear trend. Long-term bear trend, right? Now, because the closing of the S&P 500 is above all of the moving averages, this means that in the long term bear trend we have the short-term bullish trend. Okay, so when I say long-term bear trend, this is the long-term bear trend, and this is the short-term bull trend. This is the short-term bull trend, short-term bull trend, short-term bull trend, right? So in the long-term bear trend, formation of the short-term bull trend is only and only, okay, to form a lower high and nothing else. And what we do on the lower high, we sell. Simple. Okay, so this is the lower high, this was the lower high, okay, and we will sell on this lower high, and when it came down, okay, so there was a lot of profit, and this was the exact level, this was the exact time when I've told and when I've informed my YouTube community members that now we are going bearish, lower high has formed, done. Now it will be a bear trend. And if you notice that there was a downward movement from this level to this level, almost 18%, 19%, right? So again, there is a long-term bull trend. In the long-term bull trend, we have the short-term bear trend through the moving averages, right? Then comes the MACD. Again, the same case with the MACD. So with the MACD, okay, what we have noticed is that there is a long-term bear trend, because both MACD and the signal both are negative. Long-term bear trend, and because the MACD is more than the signal, so directionally, okay, it is giving this the bullish push to the S&P 500. So that is the short-term bull trend. Again, the long-term bear trend and the short-term bull trend. That's it. Short-term bull trend for what? Okay, it is going to form a lower high. That's it, nothing else. Okay, no rocket science. Then comes the stochastic RSI. Stochastic RSI, it is clearly bullish. Okay, no long-term, no short-term. It is clearly bullish. Means S&P 500 is clearly bullish through the stochastic RSI. This means that overall the picture is that the S&P 500 is still in the long-term bear trend. No change in the long-term bear trend. However, the current movement is indicating, or the current movement says, that the S&P 500 is in the short-term bull trend. So again, we have a long-term bear trend, bearish trend. In this, the long-term bearish trend, we have this is a short-term bull trend, and the short-term bull trend is there to form the lower high and nothing else. It is just to form a lower high and nothing else. Simple, right? So overall, this is the picture. Now, this picture will be more clear on the daily chart, right? So we will see that what is going to happen on the daily chart. Now, guys, once again, if you're not subscribed to the channel, then please subscribe the channel and click on the bell notification icon. And other than that, if you have not joined my YouTube community yet, then click on the join button that is there below this video, just below this video. Click on the join button and you will be able to join my community, and you will get the daily analysis, the daily updates of the S&P 500. Now guys, let's talk about this, the second point in our agenda, and this the second point in our agenda is the Fed chairman's comment. Okay, so whatever he has mentioned, so we will analyze, okay, his comments. Then the inflation, then the PMI, and then the recently NFP, non-farm payroll. Okay, so these all critical information. Okay, now let's see what the Fed chairman has said and the impact. Okay, and these are the things. So that is the point number 2. Now guys, we are here, and this is the second point of our agenda, and this is the Fed chairman comments, inflation, PMI, NFP, etc. Okay, so this is the chart of the US Chicago PMI. So this the PMI means Purchasing Manager Index. Okay, and this has to do with the manufacturing. The manufacturing. Okay, see, whatever we consume, okay, in our daily lives, whatever we are using, okay, these products are manufactured somewhere, okay, in the factories, okay, or in some other place. So this index, this particular index, okay, it simply measures this the manufacturing sector, that overall, okay. So we have the automobile industry, then we have, you know, some other industries, some heavy metal industries, okay, and various industries, right? So it simply measures this the okay, this is the manufacturing sector, whether the manufacturing sector is doing well or not. Simple. Anything that is above 50 is the benchmark. Anything that is above 50, anything means when this the Chicago PMI data, whenever it is above 50, this means that the manufacturing sector is doing well, is doing good. This means that the overall economy is doing well. Overall economy is doing well. Now whenever this the manufacturing, so whenever this index says that or whenever this index shows a value that is less than 50, this means that the manufacturing sector is shrinking. It is shrinking. Shrinking means the demand and the supply. See, this the all of this the economics in simple words, okay, it is based on the demand and supply. That's it. Anything less, so this the less than 50 means shrinking, and manufacturing sector is shrinking. Demand and supply, this means that the demand is decreasing, and because of that manufacturing sector is compelled, it is forced to produce less. Because see, when the demand is low, in that case manufacturing sector cannot produce okay, in this okay, means excessively, because that will be a waste, so that will be the losses, right? Through this data, okay, we have noticed that the manufacturing sector, okay, this is the PMI, the value of PMI will come down, okay, only in two cases, only and only in two cases. The first case is when the demand is low, when the demand decreases. When the demand is low, then the factories, okay, these industries will produce less because the demand is low, right? The second point is that if there comes an exceptional event where these the factories, they do not have enough raw material, okay, or you know, some other like some there's the earthquake, okay, or means some this some global, okay, this thing, okay, that impacts the global. If you notice, this was May 2020, and if we see that the chart says that in this the first quarter, okay, from the February itself, we have seen that there was this the decrease in the production. So the manufacturing sector shrank from February to May, okay, and it was only after May, okay, this sector, okay, it went on this, okay, or it simply moved up, okay. So this was because of this the pandemic that we have seen, that's the COVID-19. COVID-19, there were lockdowns, okay, and people, okay, they have lost jobs. So that was another reason. So this the demand was less. Other than that, okay, other than the demand, okay, there was almost all of a sudden, okay, there was this the supply, okay, there was this the heavy impact on the supply of the raw materials, okay, and that is why the factories, the industries, okay, could not produce, okay, that the final product, okay. This was the reason. Last month it was 45.20. This month it is 37.20. So what it means? It means that there is almost 20% decline, okay, in means just within a month. The index says that there is a very heavy decline. This is the worst for the manufacturing sector. Okay, earlier we have seen this thing only when there was the pandemic. This time no. Okay, this is not there. Now why I have discussed, okay, in very detail this thing? The reason is that now whatever I'm going to tell you, so you can easily relate this thing to that, or that thing to this. Okay, anyways, now the comments of the Fed chairman. So these the comments of the Fed chairman. Okay, so this was my third update on November 30 to my YouTube community members. Okay, so now so what has happened is that the Fed chairman has indicated that as early as December we can see some decrease in the rate hikes. Okay, like, so he has said that there will be, see, the rate hikes will be there, no doubt. Okay, there is no point of these the rate cuts, okay, or pausing, okay, or the stopping. No, nothing. The rate hikes will be there. Rate hikes will be there. The only thing Feds are now going to do that they, okay, in place of this the 75 bps, now they can raise the interest rates by 50 bps. Okay, so some may say that some may say that this is a good news, but no, this is not a good news. The good news will be there only and only when the Feds say, okay, that this is it. Now we are not going to increase the rate, the interest rates any further, and now we will go for the rate cuts. That will be the good news. Okay, so this thing like decrease from the 75 bps to the 50 bps. Okay, this is basically, this is not a good news. In the market, you have seen that there was a very heavy upward movement in the stock market, in the S&P 5. So if you notice that on that particular day, the S&P 500 has moved by 3.5%, 3.5%, right? So that's, and the reason was this. The reason was only and only this. This was the only reason, nothing else. Now, see, logically, this is not a reason to celebrate that there will be rate hikes, okay, but from 75 bps to 50 bps. This is not a reason to celebrate. Okay, so as of now, what is happening is that in the stock market, in the S&P 500, in the Dow Jones, okay, and in the Nasdaq and in the global stock market, whatever is the worst news, okay, so we have seen this, the PMI, okay, this is the worst news. So this, the stock market is saying that any worst news is okay, any worst news is okay, okay, and that any bad news is normal, or it is acceptable, or it is simply a good news. So the worst is okay, bad is good. This is the psychology, this is the mentality of the stock market as of now. Now when I say the mentality of the stock market, this is definitely okay, when you look into something like 50 bps, like decrease from 75 to 50 bps, but still there will be rate hikes, then definitely okay, we will say okay that this is not a good news. So when I say stock market, I mean the market movers. The market movers, okay, we also call them the market manipulators. This is their psychology. Okay, so they are simply trying to keep the stock market bullish. They are, so this is their psychology, that they are saying whatever is worst, it is okay, whatever is bad, it is good, or it is normal, or it is acceptable. Okay, and if that is, and if there is anything that is normal or good, then this is extremely good. Okay, so this means that these, the market movers, the market manipulators, they are trying to give this kind of sentiment, this kind of sense, okay, to the entire, to the global stock market, to everyone who trades in the stock market or invest in the stock market, that see, the stock market is bullish, no need to fear. Even though the economy is slowing down, even though the economies are in recession and the US is going into this, the long-term recession, no need to worry. Okay, they are simply trying to keep these the bullish sentiments up. That's it. Okay, so they just want that everyone must follow them, and everyone, okay, must go bullish. This is what they are trying to do. That was the reason when this was the worst data that we have seen in the manufacturing sector. In that case, what was supposed to happen? In that case, rather than 3.5% up, it was supposed to come down by 3 or 4%, right? But there was no reaction, absolutely no reaction in the entire stock market, okay, and in the S&P 500, Nasdaq, and the Dow Jones, right? So this is what they are doing. Now question is that why they are doing this, okay, what purpose they are going to okay, or what purpose will be solved, okay, through this. The reason is that they are trying to move up the stock market, and this will be the last time when they are trying to move it up, because once the stock market gives up, okay, from this level, then it will enter into the long-term recession. for next 2 to 3 years, okay, in that the long-term recession, okay, that we are going to call as the Great Recession or Great Recession, right? So as of now, they are simply trying to move up the entire stock market, the S&P 500, the Dow Jones, Nasdaq, each and everything, and not just the US stock market, but the global stock markets. Okay, and so what is going to happen at this point? Okay, a lower high will be formed. When the lower high will be formed, then okay, it will come down. So now we are in this the last month of the year, December. Okay, so generally in December there comes this the Santa rally. Okay, I will talk about the Santa rally. Okay, but this the entire movement, okay, because the S&P 500 and the entire stock market, okay, it is moving up. Now the chances of seeing a Santa rally, okay, are decreasing actually. Okay, so I will discuss, okay, this a Santa rally in detail in my next S&P 500 technical analysis. Okay, because the Santa rally, okay, it generally begins after mid-December, after like 18th or 20th of December. Okay, then only we see this the Santa rally. Santa rally means bullish rally. Okay, anyways, so yep, so these were the updates, okay, that I've given to my YouTube community members. Okay, in this update I have informed them, so I've told them that, see, this is okay, this is the case. So the Fed chairman has indicated, okay, a decrease in the sorry, not a decrease, but a moderate, okay, relief in terms of this the rate hikes will be there, no doubt, no question about that. Okay, so rate hikes will be there, but only 75 to 50 bps, that's it. Okay, or maybe no, not maybe, as of now not 25 bps, it will be 50 bps, okay, for next 2 to 3 months. Okay, then only Feds can think about 25 bps. Okay, so from 75 to 50 bps, okay, it is not good logically. Okay, it is not good. Now the Fed chairman, okay, that he said that he is concerned with the current slowdown in the economy. Okay, but this does not mean that with this the slowdown, okay, the Feds are going to reduce or Feds are going to stop the rate hike. No, okay, they are simply going to reduce the size of the rate hike. Size means from 75 bps to 50 bps. Okay, and after 2, 3 or 4 months, from 50 bps to maybe like 25 bps. Okay, and if the inflation, okay, or if the things, okay, or if the if this the inflation, okay, or these things doesn't come into this the control. Okay, if these things don't come into this the control, then forget about 25. Okay, we'll be back to 75. Okay, now that he so another thing that the Fed chairman has said, that he has no answer on the inflation. So when the reporters, okay, so earlier in his press conference, reporters have asked him, okay, and now, okay, in this the event he has participated, so many these the participants, okay, they have asked, okay, that is there any like okay, is there any concrete on the inflation, that when the inflation, okay, it will come down? Then he said that no, there is nothing on the inflation. He cannot comment on the inflation. Inflation is unpredictable, inflation is uncertain, and that is the concern for the Federal Reserve. Okay, because it is the Federal Reserve who is responsible, okay, to keep the inflation down to 2%. As of now, okay, as of now we are the inflation is 7.7%. okay, almost 4 times, right? So he said that because the inflation, okay, it is uncertain, okay, or as of now, okay, means he cannot comment on the inflation. Whatever the data will come, okay, accordingly, okay, the Feds, okay, they will react. Other than that, he has said that that there is the labor market, okay, the labor market is strong. When we say that the labor market is strong, this means that there is a shortage of the labor force in the market. In the economy, there is a shortage of the labor force. Okay, and the primary reason for the shortage of the labor force is the retirements. People have retired, elderly, they have retired. Okay, and the people who have replaced these are retired, okay, these the retired workers. Okay, that number is not much, and that has created this a shortage in the labor market. Now because there is a shortage in the labor market, that is the reason we have seen that the wages have increased. Companies are giving this the more wages, more salaries, more hikes. Okay, because the wages, okay, because the wages or these salaries have increased, that is the reason the inflation is still holding, inflation is still high, because people, they have money to pay. Okay, so when now, so that is means, So this thing is good for the economy in the short term, but this thing is bad for the economy in the long term. Very bad, extremely bad for the economy in the long term. Okay. Now the Fed chairman has said that it is necessary that the Fed should slow down the economy. Now why to slow down the economy? So that the things become costlier and the job demand decreases. This means that the difference between the job seekers and the opportunities available, okay, this gap, okay, not the difference, this gap, the gap between the job seekers and the opportunity available, okay, this can be reduced. Because when this the gap will reduce, then only the companies will say, okay, now we are not going to give you the hike, we will give you this much salary. So in short, okay, what we have seen or what we can say is that the Feds are going to slow down the economy. Feds are going to slow down the economy. And in order to slow down the economy, they must raise or they must increase, okay, the rates, the interest rates. Okay, means there will be rate hikes. So an increase in the interest rate means everything will become costlier because the things will be because the things will become costlier. This means that the demand will decrease. Because the demand will decrease, we will see that the companies, that the industries, okay, factories, they are producing less. Okay, so this is going to result in the slowdown. Okay, now other than that, people are going to lose the jobs. Okay, so that is another this is another thing that the Feds are trying to achieve. Okay, see, this is not an intention. Okay, this is something, okay, they are not doing willingly, but this is the demand of the time. Okay, demand of the time means there is a gap, okay, and this gap must be filled. This gap must be filled means the people who are looking for the jobs and the opportunities available, when this gap will be narrowed down, okay, when this gap will be, okay, very less, then only, okay, Feds can think, okay, now the gap, okay, it has narrowed down, now the opportunities that are available are less than the people who are available to work. Means there are more workers and less jobs, then only Feds will say, okay, now is the situation where people, they do not have jobs. Okay, means more workers are available to work, and companies that they do not have much opening, means people, they do not have money. Okay, it's not about whether the people, okay, they are going to have the jobs or not. Okay, whether they have jobless, okay, or whether they have. The thing is that the people, okay, they will not be having any money, because they will not, sorry, not any money, because the people, they will be having less money. This means that they will spend less. Because the people, they will spend less, again the demand will decrease. When the demand will decrease, the things will slow down. Okay, everything will slow down. Means the cost will also decrease. When the demand decreases, then the production also decreases. When the production decreases, then the cost also decreases, right? So this is the situation, this is the thing. So this is where the Federal Reserve, this is the Fed chairman, okay, on the entire Fed team, okay, they are working on it. So they simply want to slow down the economy, okay, in order to achieve this, or in order to bring the inflation down. Okay, so that is the reason, because the inflation is high. Okay, so they are compelled, they are forced to do this. Okay, now the other part is the NFP, non-farm payroll. Okay. Now on Friday, the non-farm payroll data, okay, it was published. So when is the non-farm payroll? Non-farm payroll, okay, means the people, okay, who are getting the jobs, okay, outside the farm, means they are not farming. Okay, like means the people, okay, these are workers, they are working, okay, either in the big companies, okay, in some role, or they are working in the factories, okay, etc. So now, in my pre-market update on December 2nd, okay, I have told my YouTube community member, let's see, because, okay, this the non-farm payroll data is out. Okay, other than that, okay, there was the news that there was a speculation, not this a confirmed news, but a speculation that the OPEC plus is going to cut down the production of the oil, because the production of the oil, okay, because the oil production will be down. This means that the oil prices will move up, and when the oil prices will move up, then the transportation cost will increase, and when the transportation cost will increase, then the prices of everything will increase, which will then fuel the inflation. Means the inflation will also increase. Okay, so this was a very significant speculation, not the news, speculation that was there in the market. Okay, on market means this, okay, general in the market and the stock market on Friday. Now, other than that, the non-farm payroll data, okay, it rose to 263,000 as compared to the previous one. So the previous one was 284,000. This time it was 263,000. Okay, just a minute decrease. Okay, very little. Okay, this is, but we are not concerned about 284,000. No, we are looking for this, the 200,000, because it was the Wall Street, right? The market, the stock market. So it was the Wall Street that has anticipated that there will be only 200,000 non-farm payroll. Okay. However, it came 263,000. Okay, very high as compared to the to what was expected by the okay, by this the Wall Street. Okay, that was the reason. Okay, in this the pre-market, you have seen that the entire this the stock market, it was down by 1.25% or 1.3%. Okay, the question is that why the stock market even reacted to this number. Okay, why this number is magical. Okay, what is the reason? The reason is that this increase in NFP simply means that even though Feds have raised the interest rates heavily to slow down the economy, the labor market is still strong. It is still strong, and people are getting jobs. Okay, this might be a good news for the economy, but it is bad news for the market, means the stock market and the Wall Street, because more people are getting the jobs. This means that the prices of the produce is going to be elevated, means the inflation will remain, okay, where it is, means it is not going to come down. And even if, okay, it comes down, that there will be, minute, very like 1-2%, 3%, that's it. Okay, however, so as of now inflation is 7.7%, right? But the benchmark is 2%. It is already four times 400% up. Okay, this means that we cannot expect any relief, okay, from the inflation. Okay, and now this means that on Wednesday, Fed chairman has said that Feds will raise the interest rates at some moderate rate, because Fed think that inflation is or will soon come down, because Feds are going to slow down the economy, right? Which will result in the job losses, and this will in turn, okay, this will in turn will help to reduce the gap between the job seekers and the companies. Okay, means the opportunities available and the workers available, the gap between that. Okay, which will then help the inflation to come down, because people won't be having any or much money to spend. Okay, again the demand and supply. Now, better than expected NFP data, NFP non-farm payroll data says that Feds can still think on going aggressive on the rate hikes and can further increase the rates by 75 bps surprisingly, and can put more pressure on the economy, so that the economy can slow down further, so that the people can lose jobs, and so that the gap between the job seekers, okay, and the opportunities available can be filled, can be narrowed down. That will simply help to reduce this the inflation. Okay, then there was this the sentiment, then the technical analysis. Okay, so see, this is okay how I give, okay, this is the update, structured update, okay, to my YouTube community members. Okay, so they know, okay, these things very well in advance, everything, okay, like what is going to happen and what we are expecting, the sentiment, movement, the levels, the kind of candle formation, everything, right? So guys, this was, okay, this thing, so this is what we have discussed. And guys, once again, if you have not subscribed to the channel, then please subscribe the channel and click on the bell notification icon. And other than that, if you want to join my YouTube community in order to get, okay, these kind of updates, okay, every day the analysis of the S&P 500, the updates of the S&P 500, then you can click on the join button. Okay, just below this video there is the join button, JOIN. Okay, and you can join my YouTube community. Now guys, we are going to talk about the third point in our agenda, and the third point is the support and resistance levels for the S&P 500. Now guys, I want to share this important information with you, that if you want to join my YouTube community in order to get this the daily analysis of the S&P 500, the daily updates of the S&P 500, so you can click on this the join button that is there just below this the video, the join button, JOIN, join button. So once you click on that, the join button, then this pop-up will open. In this pop-up, there are these two options, only one midweek update and all midweek updates. So this the midweek update means the daily analysis. The daily analysis every day from Monday to Friday, right? So this the only one midweek update. It will be discontinued from this Wednesday. It will no longer be available from this Wednesday. Now only this the all midweek update. It will be available. So this all midweek update means that you will get the daily analysis, the daily updates of the S&P 500 from Monday through Friday. Everything from Monday through Friday. And if you notice that more than 98% of my members have opted for this the all midweek updates. So these members, they are getting these the S&P 500 analysis, the daily analysis of this S&P 500 and the daily updates of the S&P 500 from Monday to Friday. So guys, once again, whenever you want to join, you can join with this the all midweek updates, and for that you just need to click on this the join button that is there. Now guys, let's talk about this the third point in our agenda, and the third point is the support and resistance levels for the S&P 500 in the coming week. So once again guys, if you have not subscribed to the channel, then please subscribe the channel and click on the bell notification icon. And other than that, if you want to join my YouTube community in order to get the daily analysis, the daily updates of the S&P 500, then you can click on this the join button that is there just below this video, just below the title of this video, join button, JOIN join button, right? So guys, once again, see these the support and resistance levels. Okay, these are what I have calculated myself. Okay, so you are not going to find the support and resistance levels, okay, through any of these the inbuilt these the technicals, okay, or these the technical indicators. So if you see that last time, okay, it was the level, and if you notice that it barely hit this the level and then it came down. Okay, when it came down, then you can notice that it came down, it found support and it moved up. So that is with my support and resistance levels. Now in the coming week, okay, and not just in the coming week, okay, but what we know about this there's a movement, okay, in the S&P 500 is that there is a long-term bear trend, and now the S&P 500 is in the short-term bull trend. Then it will form a lower high and it will give up, and then it will resume its long-term bear trend. Then again there will be a short-term bull trend, then again this thing. So this is the natural flow of the stock market. Okay, whatever you see in the stock market, this is the natural flow, right? So now we are expecting that whenever the S&P 500 it moves up, it is expected to move up to 4150 to 4160, 4150 to 4160. That is the max. Okay, 4150 to 60. Okay, so as of now, chances of seeing S&P 500 beyond 415060, okay, are very, very less, right? Because in order to move beyond 415060, see, just a bit up down, okay, that's not a problem. But in order to move beyond 415060, this means that something like some good news or some very good news, okay, or some extremely good news must come in some form. Then only the stock market in this particular case, the S&P 500, okay, it will find that momentum to breach this particular zone. Now why I'm saying, okay, that there's a 415060, okay, so the very first reason is that this is my calculated resistance level. That is the first reason. The second reason is that when we look back into the history, then we know that there was a consolidation zone. There was a consolidation zone from 4110 to 4150 to 416, means from 4110 to 4160 approximately, just a bit up down, okay, that's not a problem. So this was the consolidation zone. Two times back to back, means trillions of dollars were traded here, okay, and that is the reason why the S&P 500 is going to find very, very strong, very heavy resistance in this particular zone. Okay, and that is why I'm saying, as of now, seeing the S&P 500 going beyond these levels, okay, these chances are less. Okay, so we can see this, that the S&P 500, okay, it has went beyond these levels, only and only if there comes very heavy momentum, and very heavy momentum will come because of some news, some good news or some extremely good news. Okay, otherwise no. Otherwise the lower high, see, earlier we were anticipating that the lower high is going to form at 4050, and it was indeed it was, and that was the reason, okay, it came down, and that was the reason my YouTube committee members, they have made money here, right? Then on Wednesday, surprisingly, okay, because of the comments from the Fed chairman that we have discussed, okay, in the previous section, the point number 2, okay, because of that it moved up, and there was a very heavy momentum. That was the reason, okay, the S&P 500, it was able to breach the 4035, this particular zone. Okay, so then it moved up, but it failed, okay, to clear the trend line. Then the next day again it failed. Okay, so there are these are 2 consecutive failures. Now there are these are 3 consecutive failures. Okay, so through these are trend lines, so that is not good for the S&P 500 and for the market. So we see, we will discuss this in the last point in our agenda, that is the probable movement of the S&P 500, right? But for now, okay, this is the thing, means the lower high. So the very okay, so at first we were expected, we have expected that the lower high will form in the zone of 4035, and it was first time, okay, it formed here, it came down. My YouTube community members, they have made some good money here, then again they made money here, then again it came down, okay, then again they made money here. Okay, now it failed. There was this a failure, the breakout failure, and I informed them on Thursday itself in my final update that, see, tomorrow means on Friday, we will see either a gap down open, or irrespective of open, we will see that there is there's a downward trend. Okay, other than that, the NFP data will be there. Okay, and even if the NFP data, okay, even if this data, okay, if it comes good, then only, okay, then also, okay, we will see that the open will be somewhere around here, and irrespective, but still irrespective of anything, it will first try to move down. Okay, then only it can move up, right? So we knew, okay, that what is going to happen, and okay, and how it is going to behave. Other than that, we knew that the closing will be definitely below 4078, and it was, right? Anyways, so this is how it works. So now the next lower high, possible lower high level is the 4110 itself. Okay, if the lower high doesn't form here, in that case the lower high will be formed here, 4150 to 60, means in this the long term trend, this is the short term bull trend, and for the short term bull trend, this is the lower high 4150 to 4160, and then the continuation of the long term bear trend. Okay, this is the long term bear trend, short term bull trend, long term bear trend. Okay, the natural flow of the stock market. Now comes the next part. These are the levels. So when we look into this level, then we have the 4065. 4065. Okay, a good resistance. Okay, a good resistance. Okay, but it is not a strong. It is just a good resistance, but it is not a strong resistance. Sorry, it is now going to act as support, because the closing of the S&P 500 was at 4071. So it will act as support. Then comes the 4035. Now this 4035, okay, this is very good support, very good support. Why? Because earlier the same 4035, the zone of 4035 has acted as very good resistance. This means that this time it will act as very good support. That was the reason yesterday on Friday, okay, there was this the support in the zone of 4035, and it moved up, right? So any breach of the zone 4035, okay, it will help the S&P 500 to come down to 3990. 3990 is good, okay, but then eventually this is 3960. Okay, that is further, okay, it is good. But now finally, okay, we have this 3937. This is the zone. Very good support zone. Okay, this means that whenever the S&P 500 comes down, it will find very good support here in the zone of 3937. And when it breaches this zone, sorry, if it is able to sustain, okay, then only it will be able to move up, else it will come down to 3907. Okay, again a strong support, then 3884, and then finally 3840. 3840 is very strong support, very strong support, right? Then we have the next support at 3790. So in the coming week, if the S&P 500, okay, if it want to come down, or if it comes down, then it can come down from this level to, okay, to this the 3970 level. Okay, just below that, okay, then it can, and further we have 3750, etc. So if we measure, okay, this is a fall. If there comes a fall in the coming week, then we can say, okay, this fall will be like 7 to 8%. Okay, and and it is as per our technicals. Okay, right. Now in the upside, in the bullish side, whenever the S&P 500 try to move up, then it will find 4150 to 4160. Okay, that is the very strong resistance. Any breach of this resistance, or any, not just the breach, sorry, not just the breach, but the closing. We always focus on closing. Closing is very important. Closing above this 4150, okay, 4160, okay. And if the S&P 500 means closing, means that the S&P 500 will be sustaining, okay, above this particular, okay, the zones, then only we can anticipate that now the S&P 500 can move up further. But again, beyond 415060, there must be two consecutive closings. Then only we can say, or then only we can expect, okay, that yes, now it can move up. Okay, so if you are my YouTube community member, okay, then I will update you, okay, on this daily basis, and I will tell you that whether the S&P 500 will be able to sustain, whether the S&P 500, okay, it will be able to survive this zone or not. Means if it moves up, okay, then in that case. So now what we know is that in the next week, the maximum movement, okay, it will be confined to 4150 to 4160, and the downward movement is expected to confine to again 3937 again, okay. And yes, now there is one more possibility that we can see, that is again 3840, okay. But for the 3840 to happen, it must come down heavily, but so far, okay, chances are not that much. So again 3937 to 4150 to 460, okay. So this is the range. Now again comes the 4035 in the picture. Okay, now because the S&P 500 was able to move up and was able to sustain above 4035, this means that now most likely this movement will be confined to 4035 and 4150, okay, or this 60. This, okay, this will be the expected zone in the coming week, right? Any breach, any closing of this, the 4035 will simply bring back this zone, okay, into the picture, 3937 to 415060, okay. So this is as of now, okay, we are expecting, okay, this particular the movement, okay, the particular movement, okay, here. Now guys, once again, if you have not subscribed to the channel, then please subscribe the channel and click on the bell notification icon. And other than that, if you want to join my YouTube community in order to get the daily analysis, the daily updates of the S&P 500, then you can click on this, the join button below this, the video, or below this, the title of the video, the join button, JOIN, and you can join my YouTube community. Now guys, let's discuss the fourth point in our agenda, and the fourth point is the S&P 500 technical analysis on the daily chart. We will see, so earlier in the point number 1, that was the weekly chart. In the point number point number 4, that will be the daily chart. So we will see that how the S&P 500 is doing on the daily chart, okay, technically. So guys, now this is the fourth point of our agenda, and this is the S&P 500 technical analysis on the daily chart. This is the daily chart. So daily chart means that one candle represents one day, okay, not 1 week, 1 hour, or 1 minute. One candle means one day. Now in this, the daily chart, okay, these the technicals, yep. So first comes in this, the technicals, first comes the Bollinger Band. This is the upper band of the Bollinger Band. This is the median of the Bollinger Band. Because the S&P 500, it closed in between the upper band and the median of the Bollinger Band, this means that the S&P 500 is bullish through the Bollinger Bands. Then comes the moving averages. Moving averages on the daily chart, clear fan out supporting the bull trend. Closing is also above all of the moving averages. This means that the S&P 500 is bullish through the moving averages. Clearly bullish, absolute bullish through the moving averages. Then comes the Ichimoku. Because the S&P 500 it is trading above the Ichimoku cloud, it is bullish, okay, through the Ichimoku. So S&P 500 is bullish through Ichimoku. Now in these technical indicators, okay, there we have the MACD. Again, MACD is moving average convergence divergence, right? So we will measure the convergence and the divergence in the stock market. In this case, this is S&P 500. So as of now, MACD is more than the signal, right? Both are positive. This means that the MACD means the S&P 500 is bullish through the MACD, clearly bullish, okay, clearly bullish through the MACD. Now comes the stochastic RSI. When we look into this, the stochastic RSI, so the stochastic RSI it is means the K channel of the stochastic RSI is more than the D channel, so it is bullish. K channel is more than 94, almost 95. This means that it is heavily bullish. Means the S&P 500 is heavily bullish through the stochastic RSI. Okay. Now there is a point of concern. The point of concern is that the K channel is almost 95. Now, if there comes any upward movement on Monday, then most likely this the K channel will become 100. And when it will become 100, 100 means overbought, means overvalued, right? Means saturated, right? Whenever, so that saturated, overvalued, overbought, this means that we can see, okay, this kind of movement, right? So again, because there is a very heavy, this is the bull trend, this means that it can, even with the 100, it can survive for at least, one day, at least a minimum. Okay, this is a 1 day. So if you are my YouTube community member, okay, then we will analyze, and then I will tell you, okay, that's see that when exactly we can anticipate a reversal, okay, because of this the saturated technical, means this the stochastic RSI, okay. So S&P 500 is bullish through the stochastic RSI. Divergence is normal, not a problem. Volatility is low. Okay, now volatility, okay, it is not a problem. So this is, so now it is further indicating that that the coming week, okay, it is expected to be less volatile, and the technicals will play this the major role. Okay, this means that yes, means we can try to predict the movement. Okay, and most likely, okay, the movement will be, okay, as per this the prediction. So guys, what we have noticed on this the daily chart of the S&P 500 is that the S&P 500 is bullish through the Ichimoku. S&P 500 is bullish through the moving averages, means the EMAs. S&P 500 is bullish through the Bollinger Bands. S&P 500 is bullish through the MACD. S&P 500 is bullish through the stochastic RSI. Okay, earlier this day there was a problem. Okay, the MACD and the stochastic RSI were bearish. Okay, but because of this candle, okay, that bearishness has gone. Okay, it's gone, and now it is bullish. So all of the technical indicators are saying that the S&P 500 is bullish or absolute bullish on the daily chart. What it means? This does not mean that the trend is bullish. No, this is simply saying that the S&P 500 is in the short-term bull trend, but the big trend, okay, or this the long-term trend is still bearish. It is still bearish. The long-term trend is bearish. The short-term trend is bullish. This is how we analyze. Okay. So now we will wait and we will see, okay, where exactly, okay, it can form this the lower high, and okay, and then the possible reversal, a long-term reversal, okay, into this the recession. So that will be the technical beginning of the recession. Technical. Okay. So guys, once again, if you have not subscribed to my channel, then please subscribe the channel and click on the bell notification icon. And other than that, if you want to join my YouTube community in order to get the daily analysis, the daily updates of the S&P 500, then you can click on the join button that is there just below the title of this video. Now guys, let's talk about the fifth point in our agenda, and the fifth point is the probable movement of the S&P 500 in the coming week. Let's see how the S&P 500 is going to behave in the coming week. Okay, the upward movement, the downward movement, okay, a possible this is a hold, the reversal, okay, these things we are going to cover in this is the final point, that is the fifth point in our agenda, and that is the probable movement of the S&P 500 from December 5th, that is Monday, to December 9th, that is Friday. Now guys, this is the fifth point in our agenda, and of this the S&P 500 technical analysis, the weekly technical analysis, and this the fifth point is the probable movement of the S&P 500 in the coming week, that how the S&P 500 is going to behave from December 5th Monday to December 9th Friday. Now guys, before I tell you about this the probable movement, okay, you must not forget about this the 4150 and 4160. Okay, that why it is, okay, what it is, and what is the significance of this, because this is I have already told you in the S&P 5 in this the support and resistance levels. Okay, that was the point number 3, okay, of this the technical analysis. Now, so guys, once again, if you have not subscribed to the channel, then please subscribe the channel and click on the bell notification icon. And if you want to join my YouTube community in order to get the daily analysis, the daily updates, then you can click on the join button that is there, okay, just below the title of the video. Now so this the very first thing that we need to look into this, this is the daily candle. Okay, So I forgot to tell you about this, the daily candle in the point number 4. Okay, that was the technical analysis. So this is the daily candle. Okay, this daily candle, okay, it is a bullish candle. This is a bullish candle. Now this bullish candle indicates that there are bullish sentiments in the stock market, right? And also these bullish sentiments, because of, okay, this kind of formation, okay, these are heavy, right? So this is the meaning of this candle. Now because of this, so okay, so see, this is one thing, okay, that this is the bull candle, this kind of candle, and supporting the bull trend. Second thing, three consecutive failures from the trend line, right? This means that even before the S&P 500 can move up or it can hit 415060, first it has to manage the trend line. First it must clear the trend line. First it must move up and close and give a closing, again a closing above the trend line. Once it gives a closing above the trend line, then only it will be able to move up. But if it fails in the fourth time, means if on Monday, okay, if it try to move up, it fails, and again the closing comes below the trend line, then that will be bad. That will be bad, very bad for the stock market, for the S&P 500. That will be an indication that on Tuesday, okay, it will come down, or it will see a gap down open, okay, or in simple, okay, there will be a fall, right? Now there will be only one condition that can save the S&P 500, okay, from this fall, and that will be again a formation, okay, of a candle, okay, of this special kind of candle, okay. So that I will tell you through the pre-market update, okay, on Monday in my notes, and also through this the final update, okay, whether that candle is forming or not. Because once that candle is formed, okay, that only we can say, okay, that this fall now it will be cancelled. Rather the S&P 500 can still, okay, means S&P 500, okay, it can further move up, it can give you, okay, a gap up open, or it can give you some good momentum, okay. So now okay, just remember this thing, that if on Monday, if the closing comes below the trend line, so on Monday the level of the trend line will be 4077, approx 4076 or 4077 approximately. So if on Monday, if the closing is less than 4077, if on Monday the closing is less than the 4077, this means that there will be a fall. This fall can be this fall can be avoided only if a special kind of candle is formed. If there comes a fall on this Tuesday, okay, this means that now it will be further coming down to what? It will be coming down. So first it will try to hold, okay, above this the 4035, okay, because it is providing very good support. Now if on Tuesday, if it fails to hold above the 4035, the zone of 4035, then the chances are good that it will come towards the 3937, okay. Now the 3937, now the S&P 500 will ask for this the support from the 3937. If the 3937 is able to provide that support, most likely, okay, as of now, based on this the movement, okay, it should be able to, okay, or it will be. Now when it will be able to provide this the good support, then only, okay, it will see a reversal, the upward trend, okay, this the upward movement will be then limited to first 4035. Now again it will have to struggle, okay, again it will have to breach and close above the 4035. Once it breaches and closes above the 4035, then only it can move up further towards this the final, these the levels. That's it, okay. This is how it is going to work. If there comes a failure of 3937, means breach of 3937 or 3907, okay, then we will be back into the bear trend. So this is the short-term bull trend, okay. It will be then it will be back into this the long-term bear trend, okay. Now this is one part, okay, that is based on this the closing on Monday, okay. That can, okay, trigger the selling in the stock market, because there are three consecutive closings, okay. Now although, okay, there are these, so there is this the trend line failure. See, this is the trend line, okay, and the S&P 500 failed to close above the trend line, so we will call it as okay, so it is known as the trend line failure, okay. So this is, as of now it is indicating a fall in the entire stock market, in the S&P 500, in the Dow Jones and the Nasdaq, right? Now what is going to counter this fall? It is this candle, okay, the bullish sentiments, okay, that are there because of this bullish candle, okay. So this bullish candle is going to counter these the failure sentiments. Now When I say counter, okay, I do not mean that you will see a heavy bull candle, heavy green candle on Monday. Okay, it may or may not be. Okay, but initially, again, the initial movement on Monday. Okay, this is what you are going to notice. This is what you will see, that even if there comes a gap down open, okay, we will see that still the S&P 500, okay, it will try to move up. And when it will try to move up with this the gap down open, then we will see that it is struggling with this the trend line, right? If it is able to breach and moves above, okay, and holds, okay, and closes above the trend line, then we are good, bullish. Okay, again, if it fails, struggles, fails, then this is it. Okay, and there will be this a downward movement. Then on Tuesday again a downward, and okay, the same thing that I've told you earlier. Okay, so the bearish sentiments because of the failure will be countered by the bullish sentiments formed by this kind of candle. This is the bullish candle. Simple. Okay. Now let's talk about more of the bull trend. Okay. Now, if there comes a open, any open that is above 4077, any open that is above 4077, okay, and then a closing that is also above 4077, means open and closing above 4077 on Monday, will say that now there is a successful breakout in the S&P 500. Now we can see that the S&P 500, okay, it can further move up. I'm not saying that immediately you will see it is moving up and high, because there is no significant data, means for the next week no significant data is lined up, okay, that can give this the heavy momentum. Okay, however, if there comes manipulation, that's a different thing, because we do not know, okay, that what these the market movers, market manipulators are thinking. Okay, so manipulation is something that we cannot control and we do not control. Okay, so we can only trust our technical indicators. Whatever technicals are saying, okay, we will follow the technical. That's it. Now there is one special kind of candle. If that kind of candle is formed, then on Tuesday, even after, okay, even though there will be, okay, there's a trend line breakout, but with that special kind of candle, okay, on Tuesday there will be bearish sentiment that will give a gap down open, and most likely the gap down open will be above the trend line. But if the gap down open comes below the trend line, then again okay, it will fail. So we need to see two consecutive closings above the trend line in order to confirm that yes, now there is a trend line breakout. Now it is going to move up. That's it. Two consecutive closings means Monday and Tuesday, or Tuesday or Wednesday, or Wednesday or Thursday, or Thursday or Friday. Two consecutive closings above the trend line, then only the S&P 500 will move up, otherwise it will come down. In simple and plain words. Simple. Okay, no rocket science, right? Upward movement, we know that it will try to move up. Whenever it will try to move up, first it has to tackle, it will have to struggle with this the 4110, because 4110, okay, this is very strong resistance. Okay, historically this was the lower band of the consolidation zone. Okay, now when it will be able to breach and close above the 4110, then it will move towards 4150 and 4160, and that will be the final, and this is where we are anticipating a lower high. So a possible lower high can form at 4110, or at this level 4150 to 4160. Okay, here now so this is in the upside, okay, and then in the downward, okay, then in the downside we know that, okay, what is going. So now it all depends on what happens on Monday. Then if the Monday fails to clear the situation in the stock market, in the S&P 500, Dow Jones, okay, and the Nasdaq, then it will be the Tuesday. Okay, then the Tuesday will clear the situation. If the Monday and Tuesday fails to clear the situation, and also the Wednesday, then there will be these 3 or 4 candles, okay, that will be around here. Okay, and that can result in the consolidation. Although we have seen a consolidation here, okay, that was clearly seen in the Dow Jones. So back to back consolidation, okay, on such short notices, okay, that generally we have not seen. Okay, or if there will be any historically, okay, that will be very rare. So this means that the S&P 500 will be compelled, it will be forced to give the movement for 1 or 2 days. Okay, it can hold, not a problem. but then eventually it will be forced, it will be compelled to give the movement, whether bullish or bearish doesn't matter, but the movement should be there. So if you are my YouTube community member, okay, then we will see, analyze, okay, on Monday and Tuesday, and accordingly, okay, I will tell you that whether we are going bullish or bearish, okay, and based on this the closing, okay, and also we will see that what is happening in the pre-market, and accordingly I will advise you to go bullish or bearish. So guys, once again, if you're not subscribed to the channel, then please subscribe the channel and click on the bell notification icon. And other than that, if you want to join my YouTube community in order to get the daily analysis, the daily updates of the S&P 500, then click on this, the join button, JOIN, join button. So the join button is there just below the title of this video. So and other than that, guys, if you have any questions, then feel free to ask and I will answer to your question. So guys, this was my S&P 500 weekly technical analysis for the week of December 5th, 2022. That is from December 5th, Monday, to December 9th, Friday.